Picture this. You're managing your money with a single financial advisor who sells you mutual funds and tells you to max out your 401k. Meanwhile, billionaire families have an entire team of 10 specialized professionals working around the clock to grow and protect their wealth. This isn't just about having more money to hire help, it's about understanding that wealth building requires expertise in areas most people never even consider. Today, we're pulling back the curtain on the family office system that the ultra-wealthy use to build generational fortunes. More importantly, I'll show you exactly how to create your own version of this system, even if you're starting with a middle-class income. By the end of this video, you'll know which professionals the rich consider essential and how to access similar expertise without needing millions in assets. The wealthy don't just think differently about money. They structure their entire financial lives differently. While most people treat money management as a side hobby, the ultra-wealthy treat it like running a sophisticated business. And just like any successful business, they surround themselves with specialists who excel in their specific areas. Here's the uncomfortable truth about traditional financial advice. It's designed for the masses, not for building real wealth. Most financial advisors are essentially salespeople who push standardized products like mutual funds and insurance policies. They're trained to give cookie-cutter advice that works for the average person, but doesn't create extraordinary results. The wealthy understand that, different aspects of money require different types of expertise. Your investment strategy needs different skills than your tax planning. Your estate planning requires different knowledge than your business structure. When you try to get all this advice from one person, you're really just getting watered-down expertise in each area. Think about it this way. If you needed heart surgery, would you go to a general practitioner? Of course not. You'd want a specialist who focuses exclusively on cardiac procedures. Yet when it comes to building wealth, most people expect one advisor to be an expert in investments, taxes, insurance, estate planning, and business strategy. It's honestly impossible for one person to be truly excellent at all these different disciplines. The ultra-wealthy solve this problem by building what's called a family office. This is, basically, a private company that exists solely to manage their wealth. Single-family offices serve one ultra-wealthy family, while multi-family offices serve several wealthy families. These offices employ teams of specialists who work together to maximize wealth growth and protection. But here's what most people don't realize. You don't need hundreds of millions of dollars to benefit from this approach. You can actually create your own version of a family office by strategically choosing specialists in each key area of wealth building. The first member of the wealthy person's team is an investment management specialist. Now, this isn't your typical financial advisor who sells mutual funds. This is someone who focuses exclusively on creating customized investment strategies based on your specific goals, risk tolerance, and tax situation. Wealthy families often work with registered investment advisors who have a fiduciary duty to act in their clients' best interest. These professionals typically charge a percentage of assets under management rather than earning commissions from selling products. This alignment of interests means they make more money when your portfolio grows, not when they sell you something. For middle-class investors, you can access similar expertise through fee-only financial planners, or even robo-advisors with human oversight. It's important to look for advisors who are certified financial planners and who clearly state they operate under a fiduciary standard. And, you should avoid anyone who earns commissions from selling you investment products. The key difference is that wealthy investors focus on after-tax returns, not just gross returns. Their investment specialists coordinate closely with their tax advisors to implement strategies like tax loss harvesting, asset location optimization, and timing of capital gains recognition. They might hold tax-inefficient investments in retirement accounts while keeping tax-efficient investments in taxable accounts. The second critical team member is a tax strategy specialist. While most people think of tax planning as something you do once a year when filing returns, the wealthy engage in year-round tax strategy. Their tax professionals are proactive, not reactive. These specialists don't just prepare tax returns, they actually architect entire strategies to legally minimize tax burden across multiple years. They understand advanced concepts like income shifting, deduction timing, and the strategic use of different business entities. They also coordinate with the investment team to make sure that investment decisions always take tax implications into account. For example, a wealthy family might establish a family limited partnership to transfer assets to the next generation while maintaining control and reducing gift and estate taxes. They might also use charitable remainder trusts to convert highly appreciated assets into income streams, all while getting immediate tax deductions. Middle-class families can access similar expertise by working with enrolled agents or certified public accountants who specialize in tax planning, not just tax preparation. It's important to look for professionals who ask about your long-term goals and suggest strategies that go beyond just maximizing this year's deductions. The key is finding someone who thinks strategically about taxes. They should be asking questions about your business structure, retirement planning, and estate planning goals. If your tax professional only talks to you during tax season, you're missing out on significant opportunities. The third essential team member is an estate planning attorney who specializes in wealth transfer strategies. Most people think estate planning is just about writing a will, but wealthy families use sophisticated strategies to transfer wealth across generations while minimizing taxes and protecting assets from creditors. These attorneys understand advanced techniques like grantor retained annuity trusts, charitable lead trusts, and dynasty trusts. They work closely with the tax specialist to ensure that estate planning strategies are tax efficient, and with the investment advisor to ensure that trust assets are properly managed. For middle-class families, basic estate planning is still crucial, but you can actually access many of the same concepts on a smaller scale. Look for attorneys who really understand techniques like revocable living trusts, which can help avoid probate and provide privacy for your estate. They should also understand basic tax planning strategies like the annual gift tax exclusion and the lifetime estate tax exemption. The key is working with an attorney who specializes in estate planning, not just a general practice lawyer who does estate planning on the side. Estate planning law is, honestly, pretty complex and constantly changing, so you want someone who focuses exclusively on this area. The fourth and fifth team members, work closely together, an insurance strategist and an asset protection specialist. Wealthy families use insurance not just for protection, but as a sophisticated financial planning tool. They understand strategies like premium financing for life insurance, using whole life insurance as a tax-advantaged savings vehicle, and structuring insurance to minimize estate taxes. The asset protection specialist helps structure ownership of assets to protect them from potential creditors, lawsuits, and other risks. This might involve domestic or offshore trusts, limited liability companies, or other legal structures that make it, difficult for creditors to reach assets. For middle-class families, basic asset protection starts with proper insurance coverage and business structures. If you own a business or have significant assets, consider working with an attorney who understands limited liability companies and domestic asset protection trusts. The insurance component is equally important. Look for insurance professionals who understand the difference between term and permanent life insurance and can explain strategies like using whole life insurance for tax-advantaged savings. And you should definitely avoid anyone who tries to sell you insurance as an investment without explaining the costs and alternatives. So the sixth and seventh team members focus on business structure optimization and private banking relationships. Wealthy families often have, pretty complex business structures designed to optimize taxes, provide asset protection, and facilitate wealth transfer. They work with specialists who really understand the nuances of different business entities and how to structure them for maximum benefit. The private banking specialist manages relationships with banks and other financial institutions. Wealthy families often have access to private banking services that offer better rates, more flexible lending terms, and, well, specialized services not available to typical consumers. For middle-class entrepreneurs and investors, proper business structure is still crucial. It's important to work with an attorney or accountant who understands the differences between sole proprietorships, partnerships, limited liability companies, and corporations. The right structure can provide significant tax benefits and asset protection. On the banking side, look for community banks or credit unions that offer relationship banking. While you might not qualify for private banking services, you can still benefit from working with institutions that view you as more than just an account number. The 8th and 9th team members specialize in alternative investments and international strategies. Wealthy families typically diversify beyond traditional stocks and bonds into real estate, private equity, hedge funds, and other alternative investments. They also often have international components to their wealth management, including offshore accounts, international real estate, and foreign business interests. The alternative investment specialist helps identify opportunities in private markets and structures investments in tax-efficient ways. The international specialist navigates the complex world of international tax law, foreign account reporting requirements, and cross-border wealth transfer strategies. For middle-class investors, alternative investments might include real estate investment trusts, peer-to-peer lending, or even direct real estate investment. While you might not need international specialists right away, understanding the basics of international investing and tax reporting is, honestly, becoming more and more important as investment opportunities keep getting more global. The 10th team member focuses on family governance and, well, preparing the next generation for wealth. This specialist helps establish family constitutions, governance structures, and education programs to make sure that wealth transfers successfully across generations. This advisor facilitates family meetings, helps establish shared values and mission statements, and creates structures for family decision-making about investments and philanthropy. They also focus on educating younger family members about money management and, the responsibilities that come with wealth. For middle-class families, this role might be filled by a financial coach or educator who helps establish family financial goals and teaches children about money management. The key is creating intentional conversations about money and establishing systems for family financial decision-making. Now that you understand the 10 types of specialists that wealthy families employ, let's talk about how to create your own version of this system. You don't need to hire all 10 specialists immediately, and you don't need to pay the premium fees that ultra-wealthy families pay. Start by identifying your biggest needs. If you're just beginning to build wealth, focus on the investment specialist and tax strategist first. As your wealth grows and your situation becomes more complex, add other specialists to your team. Look for professionals who are willing to coordinate with each other. The power of the family office approach comes from having specialists who communicate and work together toward common goals. Make sure your tax advisor talks to your investment advisor and that your estate planning attorney understands your overall financial strategy. Consider using technology to access expertise more affordably. These days, many robo-advisors now offer human oversight, and virtual financial planning services can provide access to certified financial planners at lower costs than traditional models. Don't be afraid to start small and build over time. Honestly, even having a fee-only financial planner and a proactive tax professional puts you ahead of most people who rely on a single advisor or try to manage everything themselves. The ultra-wealthy understand that building and preserving wealth requires a team of specialists, not just a single advisor trying to be everything to everyone. By understanding the roles that each specialist plays, you can begin to assemble your own wealth-building team that gives you access to the same types of expertise that billionaire families use. Remember, the goal isn't to copy exactly what the ultra-wealthy do, but to understand the principles behind their approach and, adapt them to your situation. Start with the specialists who can have the biggest impact on your current financial situation, and build your team over time as your wealth and complexity grow. The wealthy don't just have more money. They have better systems, better advice, and better coordination between their advisors. Now you know how to create those same advantages for yourself, regardless of your current wealth level. If you found this breakdown of the ultra-wealthy's financial team valuable, make sure to subscribe for more insights into the strategies that the 1% use to build and protect their wealth. The next time someone tells you that building wealth is just about working hard and saving money, you'll know that the real secret is having the right team of specialists working together toward your financial goals.